Hi, Chad Tom, founding partner with Credo Financial Advisors. And as we get closer to the end of 2023, I wanted to give you a few tax planning tips that you might want to look into. First of all, have a conversation with your CPA or financial planner on whether doing any Roth conversions before the end of the year makes sense. It may make sense if you feel like you will be in a higher tax bracket in retirement, or if you feel that income tax rates will increase. The biggest thing is you need to make sure you have the cash available to pay the tax when it is due, because the IRS doesn't allow you to withhold taxes from that conversion amount. Number two, under Secure Act 2.0, if you or someone you know is a beneficiary of an IRA and that person has passed away, you have to get that money out over 10 years. And as of 2023, the IRS is still not requiring you to take a required minimum distribution. However, for example, if someone passed in 2020, you now only have 7 years to get that money out. You might want to talk to your CPA about taking some and keeping you in the same tax bracket this year, but also trying to reduce that IRA so you don't get to the end and get put in one of the highest tax brackets to try to get all the money out. Number three, tax gain or loss harvesting. We've only had 3 sectors of the S&P 500 this year that are positive. So there are probably a lot of assets that have been purchased in the last year or two that are negative. You could sell those assets, offset against any gains this year, or bank those losses for future gains to offset. And finally, if you or someone you know is at retirement or of retirement age and taking their required minimum distribution, their RMD, and they are charitably inclined and don't need the distribution to live off of, they may want to look into a QCD, which is a qualified charitable distribution. And as long as the check is cut from the custodian IRA to the charity, then you don't have to pay tax on that income. So for example, if you have a $20,000 distribution, that's $20,000 worth of income that you would not have to claim. So you want to make sure as you get to the end of the year, and I know with all the hustle and bustle of the holidays coming up here in a couple weeks, we have a lot to do, but my wish for you is that you would sit down and look at these areas to see if you can save any income tax before the end of 2023. Everyone have a great day.